Yeah, Kelly, just when you think we can't go any lower, 2.87% on the 30-year fixed, according to Mortgage News Daily. That's about a full percentage point lower than a year ago, and that's an average, so you might even be able to get a little lower. Now, remember, if you can shave at least 75 basis points off your current rate, it's generally worth it to refinance. More than 15 million borrowers currently can, according to Black Knight, and save close to $300 a month on their payments. Low rates are helping fuel sales of newly built homes, which jumped nearly 14% for the month in June to the highest level since the Great Recession, nearly 7% higher annually. And the supply of new homes for sale fell to the lowest in 7 years, which helped builders raise prices a bit. Even the number of new homes sold but not even started jumped dramatically, meaning builders will really need to ramp up the pace of production if they want to keep selling at this pace, and especially with these record low mortgage rates. Kelly?
2.87%. I just want to make sure I heard you right. I mean, that 2.87%?
Yes,
and you think that's widely available?
Mortgage News Daily.
Wow.
It's an average, which means some people will get over and some people will get under, and you do have to have 20% down. That's for, your good borrowers with good credit. But that's the average.
That is amazing. Diana, stay right there. Wilf, that kind of raises the important issue, which I know you're going to delve into, which is what does that mean in terms of profitability for the banks?
Right. And some people even been suggesting, does this mean they're going to lose money on some of these mortgage? But the key thing to remember here, Kelly, is that banks borrow short and lend long, or put a better way, mortgage rates are based off the long end of the curve. You'll take out a 10-year, a 20-year, or a 30-year mortgage, as Diana just said. But when you deposit money into your bank's savings account, you'll probably be offered by them a one-year interest rate at best, which is obviously at the moment close to zero, even lower than that 2.87% that Diana just said. So banks certainly prefer a higher interest rate curve and a steeper interest rate curve, which produces a bigger margin opportunity for them. But today, even if mortgage rates feel that they're incredibly low, 2.87%, they're still above the Fed funds rate, which is zero. And just to that idea of whether mortgages will ever be a loss leader for banks to attract customers, the answer to that is no, because there's always a risk that a loan won't be repaid. So they're not going to write that loan in the first place if it would lose them money, even if it was repaid as planned. They might do that sort of thing in other areas, like on the deposit side. Move your checking account to us with a deposit of $5,000 and we'll give you $500 cash back. But they wouldn't do that on the loan side, on the mortgage side. There's too much other risks involved with it.
It's interesting, though, Wilf, it does raise this question of whether they really want to be in the mortgage lending business right now. I mean, remember when Wells suspended jumbo mortgages? Mm-hmm. And you just get this feeling that maybe they're reluctant to really make these loans.
Well, Wells is a special case at the moment because they've got this Fed asset cap imposed on them. So there's a limit to what they can do at the moment. And so if they're going to start to increase their assets, a loan, of course, is an asset on their balance sheet, they need to make sure that it's going to be worth their while to do so. But you put Wells out, yes, it's fair to say that if prices drop, obviously the business they're doing is less attractive. But two offsets I'd say to that, like in any business, if the price of your product drops, you can offset that by doing higher volumes. And that is happening, of course, at the moment, certainly in the mortgage space, not so much in corporate lending. The other point is, again, as Diana said, a lot of people have floating rate mortgages. So if they issue it now at a low rate and someone's got a floating rate mortgage, then clearly as rates go back up again, they'll start to get a better price on their product when that happens.
Sure, if that ever happens. Diana, we are at another near low again overnight in the 10-year. My final question is, do you think we're going to find a floor on mortgage rates? So for people who say, well, wait a minute, should I wait till it goes sub 2.5% or lower? I mean, do we start to kind of hit natural resistance at these levels?
Well, 2.5% would be the base, and that's something we wrote about today on CNBC.com if you want to read more about that. 2.5% is the current level it could hit with the bonds that are out there. Remember, we say that mortgage rates loosely follow the yield on the 10-year Treasury, but they actually follow mortgage-backed bonds, and investors in mortgage-backed bonds need to get some kind of return on it. And the current bonds out there would suggest that we could only get really for the borrower as low as 2.5%. But there's still room to run if we're at 2.87. And remember, you can save up to $200 a month on average if you have more than a percentage point higher than the current rate now. Obviously, it's a pain to do a refi, but it is getting a little easier. More of it is going online, and you can do a refi in your backyard because I closed that way a couple of weeks ago on mine.
Your backyard.
Very nicely
distanced. Very appropriate.